Wherever the supply is going, there's a fire and they got to put it out. What was the number? 300, 400, 500 tons have been onshored over the last 4 to 6 weeks. And now all of a sudden, first notice day, there's 333 tons standing for delivery. That's your answer. I've been saying that forever. Kiss my ass, because I'm pretty much right.
In today's news recap, silver price jumps to near $34 as Trump's tariff plan improves safe haven demand. Silver price advances to near $34 during European trading hours on Wednesday. The white metal moves higher as investors rush to safe haven assets amid caution ahead of the announcement of reciprocal tariffs by United States President Donald Trump. U.S. President Trump is poised to announce hefty tariffs on his trading partners in an attempt to fix what he calls unfair trade participants to make America wealthy again. According to the Washington Post, the White House aides have drafted a proposal to impose tariffs of around 20% on most imports to the U.S. Theoretically, the appeal of the U.S. dollar should have increased in an uncertain economic environment, but it is struggling to attract bids as Trump's tariffs will also weigh on the U.S. economic outlook. Additionally, Trump's tariffs will also boost inflationary pressures in the near term. Such a scenario would allow the Federal Reserve to keep interest rates in the current range of 4.25% to 4.50% for longer. Historically, Fed's restrictive monetary policy stance bodes poorly for non-yielding assets, such as silver. In today's session, investors will also focus on the ADP employment change data for March. The agency is expected to show that private employers added 105,000 fresh workers, higher than 77,000 addition recorded in February. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Contracts. But just understand, people for years have said, when's it going to happen? You're watching a failure to deliver happen. You're watching the nuts and bolts of that happen. I mean, think about this, Chris. If you go back 10 years ago, I would bet that there were not 300 or 400 tons for the whole year delivered. And you cannot print gold, you can't print silver. So if somebody's standing for delivery, and they don't accept a 20% profit bribe, they want the metal instead. This will end in a failure to deliver. That's going to happen. Is it immediate? Well, it looks like we're in the process of just simply because of what's standing for delivery in both silver and gold. It's going to happen fairly soon. Yeah, otherwise you get a failure to deliver and then COMEX is done. I mean, the COMEX gold fails, COMEX silver fails. And what does that mean to all the other contracts outstanding? Like, corn, wheat, fuel oil, interest rates, et cetera, et cetera. If you prove two contracts to be completely, a complete fallacy where they can't deliver, my past partner, Jim Sinclair, used to pose the question, what is a contract worth if it cannot perform? And the answer is zero. And he posed the possibility of seeing COMEX gold at $10 an ounce offered, no buyers, and physical gold bid at $50,000 an ounce and no sellers. Also, you've got some people who believe that, and I'm sure have acted on it. So you've got some flow because of the tariff news, but I don't think tariffs are a real underlying reason to be onshoring, or for London, Switzerland to be sending, buku amount of gold to the United States. I think it's pretty obvious. In 300, 400, 500 tons have been onshored. You don't have to be a rocket scientist to put those two data points together. Russia's reserves were confiscated, stolen, whatever you want to talk about, or whatever you want to call it. From that day forward, gold has done nothing but go higher. And that makes sense because foreigners look at Russia having, what was the number, $300 billion sequestered. And foreigners are saying, well, hey, if they can do it to Russia, they can do it to us. And what that's done is it's mobilized foreign sovereign treasuries, foreign central banks to offload treasuries, and they're buying gold with it. And you mentioned another 45,000 contracts. If you look at the volume for the day, I think it was a very low number, like 7,500 contracts or something like that traded. So if that's what traded, then how did they open 45,000 new contracts?
In today's news recap, gold hits record $3,124 amid trade tensions. Gold continues to defy gravity, clearing the nominal intraday record of $3,124 on the 31st of March as at time of writing. In real terms, though, we are still 11% below the intraday high in today's dollar terms of $3,486. This was a nominal $850 on the 21st of January 1980. Amidst the second oil crisis, the Afghanistan and Iranian crises, and the failed attempt of the Hunt brothers to corner silver. Gold's driving forces are still geopolitics and the growing economic and trade war uncertainty, all of which, of course, are intertwined, with markets and investors focusing on the so-called Liberation Day on Wednesday, 2nd April. Gold is still overbought and is testing the upper end of its new steeper channel, but for now, it has a life of its own as the markets are firmly in risk-off mode. Silver cleared $34 at the start of this week, but was also overbought and subsequently dropped through all the major moving averages to $33.5. The gold-silver ratio continues to widen as the economic problems that are helping to boost gold are working against silver. It all hinges around Tariff Day. What is aid? The underlying intention, and how viable would be the implementation of any proposals. One of the president's aides is arguing for stiff negotiation and then doing a deal, while another senior aide wants any implementation to be within well-structured legal frameworks, which would add several months of lead time. The United States, Mexico, and Canada agreement had thousands of products that were exempt and just unraveling that would, in our view, be a logistical nightmare. Asian gold demand has tailed off, North American coin and Barra Re still sclerotic, but European interest is solid. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Gold and silver. I'm going to say from late October into February, I mean, there was more sell orders. I took personally more sell orders than I'd ever taken combined in the previous 15 years. And my thought process, I mean, just after talking to some of these people, this is not people taking profits. This is people running out of money and needing the capital. And I think it goes hand in hand with the feeling that there's less money on the streets. Now, in the last 3 to 4 weeks, we've definitely seen less selling, and then the buyers are picking up. So that phase or whatever it was, I think that's coming or has come to a close. To be clear, that's retail gold and retail silver. That's the mom and pop stuff. You're talking about, orders of $500,000, $1 million, 25,000, whatever. I'm not talking about $50, $100 million institutional trades. That market is obviously tight, and you can see it. I mean, the perfect example is, what is being delivered off of silver. What was the number? 80 million ounces, 81 million ounces,
Somewhere around there.
and then add to that 333 tons of gold. I mean, both of those numbers are completely unprecedented, and that's institutional. Those are institutional traders, and that market is super tight. And you're also seeing the lease rates go up. We will either see it come out of the warehouses, or you'll know that the buyers took whatever the number is, 15, 20, 25% premium to not take delivery. And I mean, that was a trick used for years and years and years, that if there was a big buyer that was standing for delivery, often you would see that just go poof, it's gone. And that poof, it's gone without anything being delivered. That's a fiat, bribe or whatever, not to take delivery.
What do you think about Bill Holter's warning? Is the financial system truly on the brink, or are we still underestimating the scale of the crisis? Will gold and silver be the last safe havens standing when the dust settles? Drop your thoughts and your price predictions for both metals in the comments down below. And don't forget to check out this next video right here. It's a perfect follow-up. I'll see you on the other side.